All right, welcome to our little seminar here. We're going to talk over the next hour about how to buy a home. We're going to touch a little bit on selling, because typically if you're selling, you also have to buy. So, and usually if you're selling, a lot of the things we talk about with buying a home apply to you as well. At the end, we are going to talk about the next seminar that we're doing, which is going to called How to Sell a Home. And we're going to be doing that next month. So if you are thinking of selling and you want to participate in that, we'll definitely be able to get you registered for that as well. So, oh, there's Dale. Dale, go ahead and unmute yourself. Welcome. So today we're going to talk about how to buy a home. We're going to talk about the process and the questions that I know you guys all have, which is, where do I start? What can I expect? How do I do this? You know, we know that buying and selling a home can feel overwhelming and confusing. And so during this webinar, we're going to break it down. We're going to try to answer all the top questions to help you feel empowered in the process. All right. So I'm going to introduce our host. This is me. I'm Christina Probeyahn. I am the owner and leader of Probeyahn Group. We are brokered through eXp Realty. And with us today, I also have my partner, Patrick. He is going to be moderating our chat. So if you do have questions, he'll be the one answering them in the chat for you today. And together, along with a couple other buyers agents, we work through the Tampa Bay area selling houses. And I am a homeschool mom, so a lot of the invitations that we put out came from the homeschool conference. So if you're joining us from there, welcome. And part of the reason I chose to homeschool and what I love about real estate is the fact that I love helping people, and I love helping people feel empowered through knowledge, whether it's teaching my kids or helping people buy or sell a home. And Tasha, if you would take a minute and introduce yourself.
I am Tasha Faiella. I'm not born here in Florida, but pretty much raised here from Lakeland. And I myself am a homeschool mom of multiples like Christina. I loved financing for multiple different reasons, but I actually started the business back in 2004, and I was like a little processor. And I was very fascinated with the fact that we were able to achieve homeownership for so many people. So I just stayed in it for this long, and being a homeschool parent, I've actually been able to help so many in the community, you know, because most of my homeschool families are very tight knit, and, you know, home is our base. It's everything. So it kind of just fell all into one for me. So I do have a team here locally. My husband's actually on my team as well. And we are always on the fields. I wish I could say I'm always behind my desk, but we're always out meeting people and ensuring that we're meeting their customer needs. So it's a lot of fun. I love it.
Thank you. And thanks for being here today. Tasha's going to be talking about all of our lender questions throughout this meeting. We also have Justine. Justine is our title agent that we work with a lot of times, and she's going to be covering our title information. Justine, can you take a minute and introduce yourself?
Well, I'm Justine Templeman. I've been with Flagship since 2013, been in the title industry at 2002. And real estate sort of like a calling. It's like you feel like you fall into it, but you don't leave it. So you just don't. So I like doing title because this is like the behind the scenes, but also it's pulling the title searches, see what's there. And sometimes you get into those difficult circumstances where I like to find that way to make sure that we're ensuring a clear policy for both all of our people, our underwriter, all of our clients and our buyers. So I think that's what I like best about it. I wish I could be homeschooling, but that's not where we are led right now. But so our kids, I have a 13-year-old and a gonna be 14 and gonna be 12-year-old. So he's gonna be a freshman in high school.
Oh, it's crazy. It happens so fast, doesn't it? All right. Thank you, Justine. Thanks for being here tonight. And next we have Dale Gerstenberger. He is the co-owner of Paramount Home Inspections, and he is one of our go-to referral partners. And he's going to be sharing today about how they help us with the process of home inspections. So Dale, can you take a minute and introduce yourself?
Hey guys, my name is Dale Gerstenberger. I'm one of the co-owners of Paramount Home Inspectors. I started out in the industry about 4 years ago with a business partner who's been in it for about 30, 35 years before you even needed a license. I'm not going to say he's aged, but that should give you a hint. I come from a background in all kinds of different aspects and really enjoyed helping people. So I was a firefighter medic for Hillsborough County for 5 years and wasn't quite my calling. I did fraud investigation for a couple of insurance companies for about 10 years and worked my way up to managing a special investigations unit. And it was always an interesting day, but wasn't quite what I really wanted to do. And I enjoy that led me to the home inspection path. And I enjoy what I do here. I get to help people, I educate people and help them make the best decision for their futures and their family's future.
Great. Well, thank you so much for joining us tonight. We're looking forward to hearing more about what you do and how you help our process. So not only do we have myself and lenders and title agents and home inspectors, but there are a lot of other people involved in our transaction as well. We also work with a transaction coordinator. We coordinate with insurance agents, appraiser, surveyor, and many more. The process of buying a home is really complex. And so I like to think of it like cogs inside of a clock. We all have to align and work in sync in order for it to keep moving forward. So it's important that you guys know as buyers, who to contact and how it all sort of works and comes together. Here's a timeline of events that we're going to cover tonight and what we see typically in a home purchase. Now, generally speaking, I'm talking about resale homes. This doesn't necessarily mean, wouldn't necessarily match up exactly to a new construction purchase, but the general idea is the same. The first thing that you have to do when you're buying a home is get pre-approved for a mortgage. That's the very first step. Oftentimes I see people on Facebook asking for a realtor when really they need a lender. So a lot of times we, as the realtor, that's our first step, is we connect you with a lender, because the first thing you need to do is make sure that you can buy the house. If you don't have enough cash to buy it, then you got to get a mortgage, and we got to make sure you get approved for it. The next step, you're going to see that once you're pre-approved, we're going to look at property. We'll make an offer. We're going to negotiate terms of that offer until it's accepted. After we're under contract, you're going to send your earnest money deposit to the title company. You'll have a home inspection and we'll negotiate repairs, and you're going to complete your loan application. After that, once we're through inspections, you typically will have your appraisal, and further negotiations might happen at that time. You're going to then see your conditional loan approval, and you might be asked for further documentation. The title work is also happening behind the scenes as all of that's going on. And then they order the survey, we get the home insurance set up, we get your utilities set up. And in the last few days, we're going to finalize those loan conditions. We're going to get you clear to close. We'll have you sign a closing disclosure, balance the CD, get your cash to close, wire your funds to title, have your final walkthrough, and then closing day, the fun time. All that entire process typically takes 30 to 45 days at most. Usually we get it done within 30 days though. So let's start at the beginning. Tasha, let's talk about getting pre-approved for a mortgage.
This is my favorite part. Generally, when a buyer has inquired about getting pre-approved, they come referred from a past client that we close, usually from the realtor or just from social media, right? So that's how it ever. And everyone's always very scared. They're like, this is going to be so overwhelming, Tasha. My credit's not great, this and that. And I just kind of smirk because I'm like, everybody feels this way. It's always the hardest step to call someone and say, all right, now expose me, pull your credit, do everything. But I promise you, it's actually not that bad. The first thing that before I even pull someone's credit, we're going to get a profile. I'm going to, talk about what you're renting now, like your rent payment. If you have any money saved up, we're going to look at the fact that if you have any programs that are available. I know everyone probably might know about the Hometown Heroes, but that one is slowly running out. We're going to look at the other grant programs, the 10K Assist, the Cardinal's 100% FHA program. Then once we kind of figure out, okay, this customer needs to stay underneath this payment every single month with their taxes, their insurance, everything included, which we'll go over in detail. Then we're going to kind of start figuring out the purchase price. And by that means it's like, okay, if we're going to stay around 300,000, so we can be at a 230 payment, then that's what we're going to measure to. Then after that, we're going to open up the credit. And this is what's very daunting for people, but I don't understand why. It's just credit. Everything's fixable. So we're going to open up the credit. I need at least a 500 for, a good solid majority of my products. But if we're going to try to achieve, down payment assistance, any of those, it's usually 600 and above. If we're not able to achieve those, scores right off the beginning, we can put you guys on a credit plan. A lot of the stuff I can fix in less than a week. But if all cylinders are good and we're good that side, we're going to talk about your income. Generally, how I handle income, if you're variable income. So I have a lot of people that we work with that are hourly. Sometimes they're working 32, sometimes they're working 40. So we're going to sit down and really look at your paychecks and kind of configure how many hours that you're working. If you're receiving bonuses, if you're receiving, any type of overtime, then that information is all going to be put in the system. And then at that point, I can be like, all right, Mr. Customer, I can approve you for FHA, 300,000, no more than $2,300 a month. This is what we're looking at, cash to close, and everything like that. As long as you're okay, but always remember, all these numbers are preliminary, right? This is where it's really good to have a solid agent when she's helping you look at houses based on the numbers I gave, because you want to know that interest rate, you want to know that max payment. And, working with the strong team, they'll be able to help you run payments as well. But once you have that pre-approval and, you're solid, you feel comfortable, then we're going to send you out with the agent and, on the way to go. But through the process, you're going to hear a lot of terminology that you're not 100%, confident with. And that's when you're going to come back and ask us. But the most important part is understanding, are we going to be looking at HOA property? When I mean HOA, like $300 a month for a townhouse. Or are we going to kind of steer away and maybe we're going to go look in Bexley, which has a high CDD. So those are things that we're going to look at as a team to figure out what's going to be the most comfortable for you and where you need to be at within, our counties. So it can be basically affordable and you're still going to be comfortable. I'm not going to be maxing you out. And then after that process, you're going to go out, look for a house. It's going to look wonderful and you're going to love it. And then you're going to come back to us and then I'm going to take you through the mortgage process on that side. And that's a whole nother chapter in itself. But the first part is the hardest. It's just making the phone call and making the application. That seems to be the hardest part for people. And I promise you, we're really friendly. Like, we don't ever be afraid about your credit, because I've dealt with a lot of credit in my life. As long as you have a job or you have some type of income, I got you. I got you from there. Everything else in there is smooth sailing, I promise.
Yeah. So one thing I know from working with Tasha is that when we get a pre-approval, it's not always a hard number. It's a lot of times
It's a variable.
Right. So it's more of a window of numbers. So it might be 300 to 325. And that variable depends on these other things, such as, if it's in a flood zone and you have to carry flood insurance, that affects your monthly payment, which means you can afford less on the cost of the home. Same thing with the HOA, the taxes, the insurance, the CDD, those things all affect that monthly payment and can affect what you can afford on the purchase price. So those are all the things that we look at. So thanks, Tasha, for covering all that. So now you've got your pre-approval, we get to start shopping for homes. And that's the fun part, right? The part that everyone always looks forward to, and that everyone thinks that realtors, we just get to go out and show homes all day. And it's awesome. And it is awesome. I love that part of it. So we get to start looking at property, make an offer, and negotiate. And that's where we come in. We're going to get you set up on the multiple listing service, the MLS as it's known. And the reason we do that, it's the most accurate real-time data. A lot of times people come to us and they've already started looking at Zillow or realtor.com, but they'll send me a property that's already under contract, or because those services are syndicated data. It's not real-time data. And so sometimes it's lagging or incorrect. Good properties that are priced right and marketed well sell quickly. So you don't want to miss out on them. When we put you in the MLS and we send you these emails with these property searches, we send it in real time. So the minute the property hits the market, you're notified. And that way we can move quickly to get you the house that you want. It also notifies you when new properties become available, but also when they make a price move, or if they've gone under contract and come back on the market, you'll see that as well. Some of the common searchable criteria that we can search for are anything that's a hard yes or no or a hard number. So price range, number of bedrooms and bathrooms, the type of property, the lot size, garage, pool, the year it's built, location, flood zone, average HOA, and square footage are all things that are searchable criteria. But oftentimes I get people asking me to search for things that aren't necessarily easily searched for or not searchable at all. So I'm going to cover a little bit of those too, just to educate you on that. So in the MLS, there's a lot of data entry points, and some of the things are required and some things are not. And if it's not required and the listing agent didn't put it in and it's just left blank, then it won't show up in your search, even if it applies. So for example, if a house has a bonus room, if the listing agent didn't check the bonus room box because it's not required to check it, it won't show up in your search, even though it has it. So these are some of the things here, like HOA specifics on what they allow, fence, leasing rules, pet rules, lot views, bonus room, the amenities, what school they're zoned for, financing options, room sizes, porch, patio, shed. These are some of the common things that people ask us for, but are very difficult to accurately weed out. So what we end up doing is we send you everything and weed through them as they come in, and we determine, you know, if a bonus room or a fence is important to you and that one doesn't have a fence, then we just, you know, get rid of it at that time. Now, here's some things that we cannot search by. We can't search by open floor plan, which is very commonly asked for, or an updated kitchen. Oftentimes people say, I want to live in a good neighborhood. I can't search by that. Landscaping, or number updated bathrooms, low traffic areas. Can I park a boat or an RV? You know, a house that just feels right. These are things that I can't search for. So we just have to go through through the listings as they come in. And I'm going to show you now in a video how that looks on the MLS.
When I set you up on a search on MLS, you're going to get emails that look sort of like this. It'll come from Probeyahn Group. It'll have the name of your search. When you click on that, you scroll in, it'll show you the most recent listing that we found. You can click on that, it'll take you right to that listing, or you can click here where it says view all properties. That will take you to one home. If you're not automatically logged in, it will ask you to log in. If you haven't created a login yet, it'll ask you to create a login. Here, it will show you all the different properties that match your criteria. And here you can zoom in on the map if you want to focus in on a specific area, and it will take you to that area, and you can click on them here as well. When you click on the property itself, it will take you to more details about the property. In this, you can favorite the property or you can discard the property. When you put a note or request a tour, we can see that on our end. However, we don't get notified when you write those. So we always recommend sending us a text.
Okay. So now when you use that system and you use that little heart function, I can see that on my end, and that makes it really easy to schedule out the showings, because we go in and we have every showing that we schedule is different. So it might require that we make a phone call to the listing agent, or it might require that the seller is still living in the property and they need to get out, or it might have a tenant living in the property. And so there's a lot of work that goes into the behind the scenes of scheduling those out, but we do our best to make sure that we're scheduling them on a good route. We usually try to start at one end of town and move to the other end, as you can see from my map here. And we try to get in as many properties as we can. I try to limit it from in a search day, no more than 5 to 10 properties at a time, because at the end of the day, all those houses start, being mixed up in your head and you don't remember what's what. We also give you notes to take while we're out looking at properties so that you can jot down what you like and what you don't like about those properties. So when we're back afterwards looking at them, it refreshes your memory. If you're out of state and you're looking to move into Florida, don't worry, we do virtual and video tours too. If you can be live with us on FaceTime, we are great with doing that. We also will record a video and upload it for you so that you can view it at a later time as well. It's important that you never go to a property unaccompanied by a realtor, even if you think it's vacant, because there's always possibility of somebody living there, or the listing agent or another showings happening. So it's important that you don't do that. And then also, if you're going to buy new construction, it's especially important that you don't go to the construction office without a realtor. When you do that, they don't necessarily let you have representation if you decide to buy with them, if that realtor wasn't with you on the very first day. So it's very important that we go with you to those things. And if you go to an open house without us, that's okay, but it is important that you let them know that you have a realtor representing you. So once we get through all that and you find the one that you love and you want to buy, it's time to write an offer. The terms that we're going to discuss when we're writing the offer are the price, how much earnest money deposit to put down, what title company are we going to use, the financing terms, days for inspections, are we going to ask for a home warranty, closing costs, are we going to ask for the seller to contribute towards closing costs, contingencies, do you have a home to sell in order to buy? That's a contingency. Closing date is also something that we negotiate during this time. Some of these things we're going to go into further detail on, but some of them, the title company, typically the seller chooses the title company, but as a buyer, you do have the right to choose the title company. However, some of the title fees that normally would fall to the seller when you choose the title company as a buyer would fall to you. So it can increase your closing costs a little bit by doing it that way. But sometimes it's worth it to work with a title company that you know and trust. And then, financing terms will depend on your pre-approval. And sometimes your pre-approval will come with an option of doing a conventional loan or an FHA loan. So it might depend on how we want to position our offer. And home warranty, we're not going to really touch on this, but a home warranty is something that would cover you against anything that might fail in the first year. And we can ask the seller to pay for that in the offer as well. So how much should we offer? So ultimately the price that you offer is up to you. I can't tell you what to offer. However, we can give you guidance. We start by running comps, which is checking to see how much similar properties have sold for in the last 3 to 6 months. We also look at other factors too, like how long has the property been listed for? If it's been on the market for 60 to 90 days, they might be motivated and we might be able to come in under their asking price. When it was last purchased for and for how much. If it was just a flip and they bought it for a certain price, they may not be willing to go under a certain price. So we look at that. We look at the current condition and any needed upgrades. So if it needs a new roof, we're going to consider that in our offer price. We're also going to look at ask the listing agent if there's any competing offers, because if there is, then we need to be more aggressive with our offer. And then we're also obviously going to consider your budget and all those things that we talked about with the things that can add to your monthly payments, such as taxes and insurance and HOA fees and CDDs and all of that as well. So once we decide that price and we make the offer and it gets accepted, hooray, celebration time. But then it can also feel very scary. This is when the buyers really start to panic. Oh my gosh, they accepted my offer. What do I do? And the first few days are sort of a whirlwind of do this, do this, do this, do this, do that. And then it's a lot of sit around and wait. So for those first few days, a lot happens. The very first thing that you do is you're going to schedule a home inspection. And we got to get on their schedule because a lot of times we only have anywhere from 5 to 10 days, usually 7 days to get that home inspection done. So we want to get on their schedule as soon as possible. We're also going to have you send the earnest money deposit, which I'm going to talk about here in a minute, and we're going to complete your loan application. We work with a transaction coordinator. Her name is Charity. And when you first go under contract, you're going to receive an email from her with a list of important dates and next steps. It's important that you hang on to that email and reference it throughout the next month while we're through the process. And then throughout the contract, Charity actually communicates with all the parties to help keep everyone on track. She's also going to you're going to receive weekly email updates from her on the progress of the transaction, so you can keep in the loop with what's happening. Sometimes you're involved in things, sometimes it happens behind the scenes. So she's just that person that keeps you informed of all that's going on. So Tasha, if you could talk to us a little bit about the loan application.
So the loan application, I personally think is the fun part. But as Christina mentioned, when you first get the offer accepted, you have so much coming at you. And as a team, at Cardinal, that's one thing we try to alleviate off your shoulders by getting it in the pre-approval stage. So when we need to do the application, we've been forwarded the contract. What's going to happen is I might be asking for updated paycheck stubs if it took a minute to find a house, or maybe you switch jobs for a lateral move, we went up on our job. Or we, kind of like liquefied our, 401k. There's lots of things that could have happened at the very beginning. So when I'm asking, for us to update your stuff for the application, this is what this means. Then what's going to happen is I'm going to send you this massive email, and it's going to, I think it's 57 pages. It's called the TRID documents for CFPD. It says that you understand that you're seeking financing on this property address. It's going to have potentially a locked in, rate. We'll discuss that up front. Hey, this is what the market is right now. Do you want to lock in? Do you want to continue float? It's going to outline the terms of the mortgage. Is it going to be a 30-year? Is it a 25? Is it FHA? Is it conventional? Further deep inside that packet is your right to receive appraisal. It's going to have your borrower's authorization. So I can do a bunch of like verifications. Once we have this pretty little package together, we've met TRID and we're in application. I'm going to send you to underwriting. Underwriting is going to just double check everything that I pre-evaluated from the very beginning that you met investor guidelines. I'm going to come back out with the approval with conditions. Everybody has conditions. There's none of them that come out just straight clear to close. And, you and I will work, with that, but I will send it, to the transaction coordinator, to the listing agent, and, to Christina, like, hey, loan's been approved. We met the, the application date, and we're within, compliance of, meeting the financing if needed. And that's not as bad as people think it is. It's really not, but we do ask for a lot of documents if it calls for it. And I promise you, I don't like asking for them, but Fannie, Freddie, FHA, and VA, they just want your whole life story. So we're going to try to work really hard at the beginning, so it's not too bad, so we don't take away the bliss of getting a contract accepted. So we try to make ours as quick as possible. It's usually the inspections what got everyone nervous, and then the appraisal. All the tensions are high for the appraisal as well.
So we'll get to all that here in just a minute.
Yep.
But the initial loan application, a lot of people get confused because they think, oh, I already applied for the loan. That's how I got my pre-approval. It's not the same thing. It's a different type of application. It's set to this particular address that we're making an offer on. And it's the actual part where we send it to underwriting. So it's just a different type of application. So it's important that we, know that there is a difference there. And then earnest money, there's many names for earnest money. You might hear it called escrow, you might hear it called EMD, but the earnest money is a deposit that's made by the buyer within 3 days of an accepted contract. It's held in an escrow account by the title company to secure the contract. And we typically recommend 1% of the purchase price that you put down, but ultimately it's up to you. So it all depends on how much money you have, how much you're willing to risk, and ultimately how strong your offer is. The higher the earnest money, it really adds strength to your offer. So now this deposit is refundable. It might be refundable in certain circumstances. It can be refundable if during your inspection period you find something that you can't live with and the seller refuses to fix. It can be refundable if your loan is denied for some reason within your loan approval period. And it can be denied in case of a natural disaster preventing you from buying the home. And at the closing, your deposit is applied towards your cash to close. So it isn't extra, it goes towards your closing costs at the end. Now we use something called an as-is contract. An as-is contract is written by the Florida Bar Association. It's a 13-page contract with fill in the blanks that we're allowed to fill in. I'm not allowed to alter anything on the contract, nothing that can add or take away. We do have addenda that we can add to the contract, but those are also written by the Florida Bar Association. So as is means that you're agreeing to buy the property as is, but with the right to inspect it. Now, with the right to inspect comes the right to ask for repairs. Now, the seller is not obligated to comply with those repair requests because it's an as-is contract. You're buying the property as is, right? Well, in the inspection period, you in turn are not obligated to move forward with the sale and may opt to cancel the contract if the inspections come up faulty and there's a problem and you're not willing to live with it. So it protects the buyer more than the seller in that case. And oftentimes what happens is we end up negotiating. So, Dale, if you would you share with us a little bit about what a home inspection is?
Hey, everyone. So a home inspection is really a deep dive into the complete functionality of the structure, the systems, all the components, everything that's included under the roof and including the roof. So moving into what the actual inspection covers, it'll check out the roof, the exterior covering, whether it's vinyl siding, possibly asbestos, whether it's wood planks, stucco, and any issues that could come from that particular type of siding as well. It also has to do with a lot of the appliances. So the inner components of the home. Does the dishwasher work? Does it flood the kitchen when it drains? Checking out those types of problems to see if there are any issues there. We also move into a complete examination of the electrical as well as the plumbing systems. What happens if we run the water for 30 minutes at each location in the home? Does it back up? Do the toilets flush properly? Are there any weird smells that we might need to look into further that could indicate there's a biological growth somewhere? So looking into all of those things are part of what we do as far as what a home inspection is. We'll look in, when we move into an inspection, we'll look into a lot of places that your typical buyers, you're walking through a home, you won't check out on your own. So we'll move into the attic and look for possibly broken trusses. Sometimes we find those quite regularly, and just having a look at the house, you might not know it, but there's some indicators that we'll see with like doors not closing properly or cracks that are in certain positions on the exterior of the home. And just knowing from experience what those cracks could be pointing towards gives us a better chance of locating the actual issue when we go into the attic or the other spaces where those issues might be present.
Now, in a home inspection's great, but it's also can be limited. Tell a little bit about what a home inspection is not.
So a home inspection is not a guarantee. Some inspectors do come with guarantees. Our company comes with a buyback guarantee. So if we miss something, we'll buy the house back cash. But I always joke with folks when I'm explaining what a home inspection is. And I'm like, hey, listen, like I can only see so much. I don't have x-ray vision. I do have thermal cameras. A lot of those will help point me in the right direction. My wife took my crystal ball when I got married, so I can't tell what the future holds, but I do have a really good idea of what's going on in the house by looking at the symptoms. When it comes to these types of inspections, there's a lot of additional tools that we'll use to help aid us in determining what the problems are, if there are problems, and diagnosing them further if we're able to. We'll use tools such as thermal cameras and thermal drones. Those can give us a good idea if there's issues on the outside of the home, that the temperature variance will show up and we can see those types of problems. Doesn't guarantee that there are no issues though. We'll use all kinds of different moisture meters, mold sampling kits, air sampling kits, as well as a wealth of knowledge from just years of experience in determining what the problems could be.
Very good. And then it's important to know the home inspector too is going to possibly refer you to other specialists, like a roofer or air conditioner technician, electrician, plumbers for further evaluation. This is a typical inspection report. Can you talk a little bit about your reports still and how those look and how you present things?
So one of the main goals as a home inspector is to give you the information that you need and arm you for your future conversations and decisions that you have to make, whether it's a house that you want to move forward with, or it's a house that you think has too much work and you're not sure that you want to get involved with it. Some of these reports can be upwards of 50 pages. I personally try to keep mine a little shorter to make them easier to read and understand. Very concise detail. When we write these reports, we put it in a matter of fact kind of point of view, so to speak. So we make sure that you're aware of the facts of what's going on and what the exact issue is. Sometimes we'll have some extra knowledge that we can share with you if questions are asked as far as how easy is that to fix. When it comes down to quoting a lot of the repairs, it's not something that we can necessarily get into. If it's something easy or it's a small problem, a lot of those things we can give you little tips on as people that are generally very handy in the field. But the most accurate person that can give you a quote on fixing some of these issues that I'll see, especially in these pictures here, are the people that's willing to do the work. So we also like to generate what's called a defect summary report. So not only do you get the inspection report that has all of the specs of the home on it, but it also generate with the Reader's Digest or the Cliff Notes version that gives you kind of a high level overview of, hey, here's exactly what the problems are in this house. Once you read through that, you've got a good idea of what you're dealing with. It's always a good idea to go back and read the main report as well and get a complete understanding of exactly what's in the home. So we do our best to include those defect summaries. Those are only about 10 or 15 pages usually at the most, but it gives the homeowner, the home buyer, a really accurate summary of what the meat and potatoes are, the issues in a home.
Very good.
In some of these photos here, these are some of the things that are common that we see, where we've got some missing insulation, some damaged ductwork. There's a roof leak in that bottom left picture with the red circle around it. It's a little hard to see there on the screen, but you can see where the roof had leaked and it ran down the inside of the truss in between the plywood. So those are common things that we're trained to pick up and identify. And those can cause some issues on some of the other reports that are generated at the same time, such as a 4-point inspection, which should lead us to the next. So a 4-point inspection is included in your inspection report. It is a separate report. This is really generated for your insurance company, but it covers the 4 main aspects of a home. What's the condition of the roof, the heating, air conditioning, and ventilation system, the plumbing, and the electrical. So these are the things that the insurance company is primarily concerned about. They don't want to read through a 50-page inspection report. They want something that's short, concise, and those are the main things that they're concerned about to make sure that the house is functional and worth insuring. When it comes to looking at some of these reports, there are some things that, as Christina mentioned earlier, might have to be fixed in order to get the house insured. Some of the older homes that you'll find might have aluminum single strand wiring running through the home. And that's one thing that you can't tell by just looking at the house. You've got there are certain aspects that have to be taken apart in order to determine that. And insurance companies don't like that. So when it comes to working with an inspector that's knowledgeable, we can point you in the direction of someone that we know personally has done these types of repairs before. Oftentimes your agent might be familiar with this person as well, but there are some things that usually have to be fixed up before we can move forward in the home purchasing process and getting that insurance purchased. One of the other things we move into is also a wind mitigation report. These come with the inspection as well. This is another separate report. So you get a lot of paperwork from us. A wind mitigation report tells how the structure is built. When was it built? What type of building code was used to complete that structure? How the roof is attached to the actual structure. Is it held on with toenails, or is it held on with one of the best you can get of hurricane straps? A lot of these reports can also go into insurance discounts. So if these reports are written by someone that's knowledgeable and they're able to make sure that you've got all the proper ratings for everything, these reports can be beneficial in reducing your insurance prices as well.
So when we get these reports and we comb through them with you, it can feel very overwhelming, but we really try to pare it down to 3 main areas. We look at defects that affect insurability, obviously, because without insurance, we can't buy the house. We look at defects that affect safety. We don't want you buying something that's unsafe. And then we also look at things that affect functionality. If there's something you're going to use every day and it's not functional, then we've got a problem that we'd like to ask for repair on. But remember that in most cases, you're buying a used house. With that comes normal wear and tear. And when it comes to things that are convenience or cosmetic, like a scratch in a kitchen cabinet or something along those lines, we recommend not asking for a repair because it is an as-is contract and the seller can refuse your repairs. And it can be costly to have to start over if we can't come to terms on repairs. And so we really try to hone in on the things that are most important to move forward with the property being safe and functional and most importantly, insurable. Okay, so now we've gotten through the inspections, we've got them to agree to repairs. What happens next? So next thing, once we give the lender the clear that we're through inspections, they will order the appraisal. They're going to look at your conditional loan approval and they're going to start asking you for further documentation. And meanwhile, while all this is happening, title work is happening in the background. Once we get through the inspections, after that, it feels like nothing's happening from the buyer perspective, because a lot of it's happening behind the scenes. There's underwriters that are working, there's appraisers that need to be scheduled in the title work. This isn't something that gets, voiced to you on a daily basis. So it can really feel a little scary because you're like, uh-oh, we just had 4 or 5, 6, 10 days of constant communication. And then the next 10 days, it just feels very quiet. So this is some of the things that happen behind the scenes. So Tasha, you touched a little bit about conditional loan approval. You want to expand on that a little bit?
So conditional loan approval is my specialty. This is what I love. When it comes out of approval, the underwriter is going to make it, subject to clean title work, which that'd be Justine. She would provide that to us. Final insurance. And sometimes we'll have insurance quotes at the beginning because we want to make sure your debt to income ratio is right on point. That's where, Dale's reports are going to come into play. So we're going to send that off to insurance. It could be us doing a rent and verification. The underwriters, subject to appraisal. I want to make sure that the home is going to appraise for what, was being offered, to make sure that there's no repairs that might be needed for FHA, which is a whole nother thing. Also letter of explanations. It could be as simple as, hey, we saw your last name was this back on 2021 W-2, but now it's this, what happened? And it can be simple as, hey, I got married. Here's a copy of my marriage certificate. We want to make sure it's you as the buyer. Also another set of disclosures. At this time, this is when I like to have my buyers locked. I want to have you locked in your interest rate. We have, everything figured out. So you're going to get another set of disclosures. You're going to get a lot of disclosures, and just want to let you know. Also, it could be that we have to source, remember that EMD earnest money escrow that she mentioned. We want to make sure that those funds came from either a donor or your bank account. So we're going to ask for a transaction summary showing that actually went through your account, so I can credit it to you at closing. So this is more of tying up all the loose ends to verify that we meet all investors' conditions. And when I mean investors, I mean FHA's handbook, conventional Fannie Freddie. This just isn't just Cardinal picking on you. This is just what we have to do to meet the standards for, the housing lending, essentially. But this is the fun. This is when we're at the very end. But to kind of recap what she said, I do have buyers that are like, I'm not hearing anything. I'm like, that's good. If you hear from me, that's not good. But if it's quiet on the lending side, that's a very, very good thing. I tell people, we start off as best friends, we get married real fast during the mortgage process, and then we kind of like divorce and just become friends again after you close. So I always tell everyone, if you don't hear from me, it's okay, I promise. It just means that we're trying to pull in all this stuff from all these outside people, like she just mentioned, appraisers, titles, insurance. It's so much if you knew the mass amount of ordering that we had to do. And unfortunately, not everybody likes things instant like I like them. They do actually have processing times, unfortunately.
Thank you. So we mentioned the appraisal. Now, one thing that I know is a lot of buyers get confused on the appraisal versus the home inspection.
Yes.
And how they're different. And an appraisal can actually be different depending on what kind of loan you're getting as well. So typically an appraiser is going to use all the same comps, but when you're using a loan that's an FHA loan or a VA loan, it actually the appraisal comes with a little bit more stringent requirements to that. So, but essentially the appraisal is a third-party opinion of value. It is probably the most stressful part of the whole process because it's the one thing we really have no control over. As listing agents, we do go to our appraisals and we fight for value. We share what the improvements have been done on the property. We share comps that we use to price the property. But at the end of the day, it really comes down to that appraiser and what they think the property is worth. Now, the lender does not choose the appraisal company necessarily, but they bid it out. And to avoid price fixing, it's actually illegal for someone like Tasha to have a direct conversation with the appraiser. So a lot of times the realtor gets involved in the middle of trying to help all those, understandings of where that value is. Whatever the value the appraiser gives to the property is the value that the lender will use for the basis of the loan. Now, on rare occasions, we can fight it if it comes in super low, but most of the time it is what it is. And that's why it's really important that we consider comps when we're initially making your offer, because the comps are what the appraiser is going to be looking at. And if the value comes in under your contract price, we have to renegotiate the price. Now, if it comes in above or at the contract price, we're totally good to go. We just move on to the next step. But the anxiety and the stress leading up to that point is probably the hardest part of the whole transaction.
Mm-hmm.
So, and then once if it does come in low, the negotiation, how do we handle a low appraisal? So there's basically 4 options when we get that appraisal back. In some cases, the difference might be very small and we're able to come to terms pretty easily. In other cases, it can be fairly drastic. I've had appraisals come in as low as $80,000 low. So it just depends on the price point you're buying in and what the appraiser, is using for comparables. But ultimately, buyer can ask the seller to reduce the price to meet the appraised value. The seller can ask the buyer to increase the amount of cash they're bringing to close the gap between the appraised value and the contract value. The buyer and seller can meet in the middle, where the buyer brings a little extra cash and the seller reduces partially. Or if we can't come to terms, we end up canceling the contract, which no one really likes to do. And ultimately the seller has to go back on market and the buyer has to go back to searching for property. So now if you end up canceling your contract due to a low appraisal, most of the time you will get your earnest money refunded under the umbrella of your financing contingency. Unfortunately, though, the cost of the inspection and the appraisal are not refunded. So it does end up being a cost that you eat and have to repeat if we go under contract on the next house. So from a cost perspective, just so you know, an inspection, a home inspection like what Dale does, can cost anywhere from $400 to $600. Sometimes less, sometimes more, just depends on the size of the property and how much work is needed there. But that's the general window. And then an appraisal typically between $500 and $600. And again, it can change less or more, but typically between $500 or $600. So altogether, if you were to lose a contract based on a low appraisal, you know, you're out about $1,200 that you don't get back. So it can be a hard pill to swallow. So we definitely don't want that to happen. So we do everything that we can to try to meet in the middle somewhere, or make it happen somehow, some way. So Justine, now we're going to talk a little bit more about what the title company does. Meanwhile, while we're all doing this, Justine's over there working behind the scenes doing all of this.
That's right. So again, the title company, I love how Christine is incorporating us, because sometimes we're like the unknown. You're like, who's getting a call from this person? So once the contract comes in, it comes to us, we open our file, we go ahead and reach out to the buyer to contact you to go ahead and place your escrow deposit with us during that time frame of the contract. And then this is where we're going to be ordering all the searches. But you're going to first question, what is title insurance in the first place? So where's my next slide? Yeah. So title insurance is an insurance policy that protects the owner or the lender's interest in a real property against loss due to title defects, liens, encumbrances, and or other matters. In sense, it's an insurance policy, not homeowners insurance. It's an insurance policy insuring against liens, judgments that may have been missed from the prior title. So it's the what ifs. That covers what ifs. If there was a mortgage that was missed, if there was a business that sold and the correct entity didn't sign, and a lien or judgment, probates, those will come up through the searches. If some through probate, if like a certain document, an affidavit was needed to coincide with that probate, it's a what if. This is, again, it's insurance. But this is a one-time insurance. So when you purchase your home, it's once. So you don't have to go ahead and continuously do it every time you do refinance or do anything with your property. It's one time. Unless I take it and I sell it to Christina, then it's breaking the chain of title. So once it's broke, then it won't be in place anymore. But yes, how does the process start? So again, once our contract is received to the title company, then you'll get an email confirmation, as well as we'll reach out to you introducing ourselves and place our escrow deposit. Okay. And then that's when we open the file, we start compiling the information. So again, everybody's working behind the scenes. So we're getting your names. So let's say a contract comes in as John Doe. Well, your driver's license technically says Jonathan Doe Jr. So this is one of the things that we're going to go ahead and start verifying the information, how you're going to be taking title, because the contract, when you sign it, does confirm how you are going to be taking title. Also, marital status, homestead, if it's going to be your primary residence or your investment property. And then also, we're compiling all this information together with seller, with you, to go ahead and clear title. So seller, we're getting the payoffs, everything we need to go ahead and ensure the transaction. Because ultimately what we're doing is ensuring a clear policy with our underwriter, buyer, seller, lender, and all the parties involved. And what does clearing title look like? So you're going to get a commitment, and we'll look at that the next one. And it's going to have a list of requirements. So it's, when you get it, it might look like hieroglyphics. But that's why you have us, you have your agent, you have everybody involved to go ahead and work you through what all it needs to be cleared. So your requirements will have payoffs, HOA estoppels, That's where we get the report from the HOA, any judgments that need to be taken care of, notice of commencement, so prior work orders that were never closed, because they usually have to be closed within a year. And if not, we have to make sure they're paid and the work has been done. And the preparation of any documents as your deed, how you will be taking title. So this is your commitment. This is our commitment. So this is how our underwriter is going to go ahead and put together a commitment to ensure your transaction. So as a buyer, you want to take a property knowing that you're not going to take any prior liens or judgments, because you don't want that. So this is what your commitment is going to look like. So in the first page of your Schedule A is going to show how you're taking title. So that's going to be how you're good. So it's going to show how you're going to take title, and that's from your contract. And then it's going to show how you're going to be invested, insured, as well as your lender, Cardinal, and their loan amount will be also their lender's policy, because we're going to issue a owner's policy and a lender's policy. Then it's going to show who is currently holding title. So that's where you're going to see your seller. And then right underneath that is a bunch of lot block, blah, 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 blah. So this is what the fingerprint of the property, Oh, somebody said something. So this is your fingerprint of the property. So this is the identification of your property. It's not necessarily your address or your parcel number. This is the identification, what property you are purchasing, that coincides with the tax collector's office, the property appraiser's office, and your contract. Then you have Schedule B1. These are our hieroglyphics. So this is our requirements that will be needed to be satisfied to ensure the transaction. So again, it may look a little different than normal paperwork, but again, this is why you reach out to title, you reach out to Christina, your agent, and also your lender. So it's going to call for a warranty deed. That's how we're going to insure the transaction, as well for a mortgage. When you sign your mortgage, how it's going to be insured with your lender. And then for this case, there's some documents from the seller that will have to be signed, continuous marriage affidavit. So it's primary residence. They have a common name, like Jane Smith and John Smith. So this continuous marriage affidavit will be signed to ensure over any of those common names that may have a judgment, because it's primary residence. And then it's calling for one mortgage as well as an HOA, and then some lien searches. And then we have our Schedule B2. These are exceptions, exactly what it says. They are not going to be covered within your transaction. So these will stay on your property. So the next one will show the standard exceptions that will remain are your taxes and HOA restrictions. They will not be removed. Next one. So coinciding with the title search, you'll also get a lien search. Lien search is any ghost liens that's not yet recorded in official records. I like to say ghost liens because we don't know they're in official records because they're not recorded yet. So it will be compiled of code violations, anything that's open, any water utilities, any special assessments, paving assessments, and as well as permits. But permits is one thing that title will not insure, but they do show in our report. And this is just an example of our lien search. So it does show cleared code, cleared permit, cleared water, but you could see it's a red X. So this is like, hello, there's something due that when something is due, it will be taken care of within the closing. So we will collect that. And since it's the seller responsibility, will be collected from the seller side.
So this is the final week. You just got your title commitments, you got your conditions are being cleared, and we're through the appraisal negotiations. The next thing is that the title company is going to order the survey. We're going to have, we're going to make sure your home insurance is in place. We're going to get you set up with your utilities. We're going to get with the lender to finalize those conditions, get your clear to close and sign your closing disclosure. And then the title company will balance the CD and give you your final cash to close. So, can you talk a little bit more about the survey and what that is and why we need one?
Yes. So survey shows the property lines of your property. So it's not necessarily the plat, because if you can go into official records and find the original plat when when they were building the property. But your survey actually is specific to that lot and block, the identification, the legal description of your property. And it shows all the lines where it starts. And the surveyor will, when they go out, they'll usually flag the property to show where it begins and where it ends. And then we need one because definitely when you get your lender is going to require a certain endorsement. And without that survey, we can't ensure that endorsement to your lender. So when we get that survey, it will show any encroachments, anything abutting against your line, showing like a driveway going across your line to meet the right of way, and or anything that crosses over. So we're going to go ahead and notate that as well, and is in our commitment. And a prior survey would suffice as long as it meets our underwriter's conditions. Each underwriter has our own set of conditions, as well as a seller did not make any changes to that survey. So if they extended a patio, that alters the survey, because the survey as is shows how it was done at that time. So if anything was changed and altered, then of course that survey's, you will need a new survey, and usually it will be at the buyer's expense on the contract. And this is an example of our survey. So the blue lines show the outline of your lot lines, and it shows your driveway. It does extend over your lot line, so that will be notated in our commitment. And then let's say they took the fence, it was a chain link fence, and they took it down and put a vinyl fence up. That does change the survey. Let's say if there was a shed, they had a shed, they took it down, they moved it. It changed the survey. So anything changing that survey, but it doesn't coincide for inside the house. So you remodeled the kitchen, you changed out the cabinets, it doesn't affect anything inside the structure. It's anything outside the structure, changing the building structure itself or the lot lines, anything that goes over or change. Yeah.
Perfect. And the survey is something that a lot of buyers end up needing after their closing, when they want to add anything like a fence or a pool or any outdoor structure of any kind. They will usually ask you for a copy of that survey. So it's an important document.
And I'll piggyback really quick to that,
Yeah.
is that usually if you do change that, you put in a pool, we do ask, we don't require, but we do ask that you would inquire about getting a new survey after that, because once you change that survey, if you go to refinance and you go to submit that survey, you've changed it. So now you're going to need a new survey as well to submit to your lender.
Great, thank you. One of the conditions of the loan will be obtaining an insurance policy, and if they're agreed upon for the repairs are needed for that clearing of the 4-point, we need to follow up and make sure that those were done. So one of the things that we do is we have the seller and the seller's agent give us pictures and receipts of things that have been repaired. And then we give that over to your inspector. They update the report, give you what's called a clean report. And then we get that over to the insurance company to get that insurance binder that's needed to clear that condition. Now, one thing I will say is that make sure you get a policy that covers your contents. This is something I've noticed that people will shop for the cheapest price. And when they're trying to get that cheaper price and an insurance agent knows it, they will just not include coverage for the contents of your house, which is a huge risk. If something should happen, they will only cover the structure, not the contents. And so they will do that in order to give you a lower price. So it looks like they're the cheapest, but oftentimes it's because their coverage is not the same as something that actually covers you fully. So it's important that you look at those details of the coverage, not just the price. When it's time to set up your utilities, we actually have a service that we provide for free. It's called Utility Connect, and we'll even do your mail forwarding as well. And you just go in here at this website. We send you this link too during that initial introduction email. But you go in and register with the new address, and they will do the cumbersome task of fixing up all those utilities for you. So it's really great. Lastly, finalizing those loan conditions. Once you are finally cleared with the underwriting, we get the exciting email that everyone loves, clear to close. Yay! Tasha, can you talk a little bit about the TRID rule and the 3-day rule, what that means?
I just like to say the clear to close is my favorite email to send. I
It
just want to
is,
say that.
It's always
it
a thing of
is,
celebration.
yes, it is like the biggest weight off everyone's shoulders. It's the reason why we try to move as fast as possible to get to that end goal. So what you mean by the TRID is that underneath the CFPD, it states that the buyer who is on the note needs to receive the closing disclosure 3 days before closing. And it's very strict. I have yet to be able to bypass a TRID because, the buyer didn't open the email. They just didn't have internet connection. It doesn't matter. You have to meet it. And the most important part is that when that CD first initially goes out, it will probably not be 100%. She talked about, the CD being balanced. Usually we send it out, try to get it as close as we can. But then of course, like someone like Justine needs to go in and be like, actually, that we need to adjust this because there's additional page for recording. But we try to get as close as possible. I will personally call you or someone on my team, be like, hey, your closing disclosure has been released. I need you to sign that. That then starts the 3-day TRID from there. And it is 3 full business days, y'all. Like it's down to I don't even remember, like it has to be signed by a certain hour based on your area where you're at. So once we clear TRID, and you'll hear us talk about like, hey, we need this signed so we can clear TRID to meet this closing date. Then that's when at that time we can go ahead and, get you ready for closing and get the closing package out. Unfortunately, there's no way around it. And some people are like, well, why do I have to sign this if it's not balanced? It's this, or we're not going to make it. But when I mean that we're not balanced, we might be off by like $100 or $200. The most important part is that we're highlighting that this is the property address. This is what your interest rate is going to be. This is what your payment's going to be. Those items are not going to change. The only thing that might change is a little bit of your cash to close just based on the numbers from title that we might have overlooked and we didn't know about. But we try to hum in as quick, as soon as, as tight as possible. All our other disclosures are usually a little bit more inflated to catch us. But I will say, if at the last minute, you're like the day before closing, you're ready to go like, hey, Tasha, I want to change my rate. You do. You can't change your rate. You can't change any APR items more than 1/8. You can go down, but anything that costs more than 1/8, we actually have to stop it and we actually have to restart the clock for 3 days. So that's the reason why I tell all my buyers, you can make as many changes as you want on your loan all the way up until like 3 to 4 days before that closing date. Because once I release that CD, I can't go back and change it unless we're going to restart the clock. And we have to make sure that we communicate that properly with the sellers, because usually sometimes my transaction is butt up to the seller buying another house. And then it's like this domino effect. So it's really, really important by the time that CD date comes that we have your loan terms locked in. We won't make any of the changes without having to restart the 3-day. And that's not my rule. Unfortunately, that's the federal government that put that in place with the TRID.
Right. And so once you accept your closing disclosure and you sign off on it, the lender puts together their loan package and they sends it over to the title company. So Justine, if you could share with us a little bit about what it looks like when you're balancing the CD, what are you taking into account that would cause that small difference that could be alarming to the buyer?
What small difference? So balancing between the lender?
Yeah. So a lot of times when the lender sends their closing disclosure, it doesn't always match exactly the number that you give them for cash to close. And that can sometimes cause, anxiety. So what is it that you do on your end for balancing the CD that makes those numbers change?
Like the HOA, Justine, like when we don't know the estoppel fees and stuff like that.
Well, yeah, it's every little detail. So it's between the HOA, and then sometimes also if I get an invoice for homeowner's insurance ahead of time, then next, sometimes I could get when I get the prelim in, it could change. So they changed something in the end term and I didn't get the new invoice. That affects also the escrows. It could be the interest. The credit report, sometimes the credit report, it was the estimated high amount, and then sometimes it comes in at a different amount. So, it's everything down to the penny. Sometimes I'm off a penny and yeah.
So it's really normal for that 3 day before when you're signing off for that number to not match exactly. It's not something to be alarmed about, it's something to, and it's also very normal to not get that final cash to close. Sometimes, usually the day before or 2 days before, but sometimes I've seen it come even hours before we close, because we're working, behind the scenes trying to get all those numbers to match up and even out. So all of that's very normal, and it can be a little anxiety riding for the buyer. But it is, just know that we've got your back, and we're not going to let you flounder, I promise. So now you've time to wire your funds. You got that closing number. It's time to wire those funds and do your final walkthrough, and then the fun of closing day. So wiring your funds is an important part. They will provide you with wiring instructions, but it's really, really important that you use the information that we give you on day one for the title company to call them in advance and confirm the wiring instructions. Because once you wire that money, it's gone. And if you wire it to the wrong person, there is no guarantee that you get it back. And usually it's a large amount of money that we're talking about. And we don't want that to happen. So it's really, really important that you verify your instructions prior to sending, and that you call the title agent that you've been in communication with the entire time to verify those numbers before sending it. We even make you sign a wire fraud prevention notice, whether you're the buyer, the seller, whether you never wire money at all, we make you sign it because it's that important, because wire fraud is such a big problem right now.
It is, I had to cut on this one. I had a buyer that received wire instructions inside of their email. And what happened was it caught the title company's email and in their email, they almost sent it to a different title, to a different bank, because it looked like the title company's email. So something I tell my buyers, you can be sitting there ready to wire in front of the bank. Call the title one more time. I don't care if you think you're annoying them. Call them one more time. Like, can you please just read these numbers one more time back to me? Because the amount of spam emails, it's unreal. Or they might leave you a voicemail. It's a real issue, and people try to punish other people's emails all the time. It's an ongoing thing that we even do in our continuing education for our license to help buyers.
Yeah, it's happened to me actually. I had a buyer that was sent information and it looked so real. Even the phone
Legit,
number,
right?
one digit off. So it's just really, really important that you don't call the number that's on the email that's given to you, but you go back to the original information that we gave you and call and verify. Take that extra step. It's worth it. Trust me. And then we do our final walkthrough. So either the night before, the morning of closing, we're going to meet at the property. We're going to do a final walkthrough to make sure there's no new damage or everything is as it should be according to the contract. If they said they're leaving the fridge in the garage, did they leave the fridge in the garage? That kind of thing. And then on closing day, we're going to go to the title company, or in some cases, the title company comes to you. One of the things I love about Flagship is that they will send out a mobile closer if you don't want to go or can't make it to the title company itself. You show your ID, and it'll take about an hour and a half to 2 hours from start to finish from all the signing that you do. You look like the package is like this big of paperwork. It's a lot of signing, and a lot of it's stuff you already signed digitally, but they make you sign with a wet signature. Then once that stuff is signed, the title company sends over to the lender, oftentimes for funding approval. The funding department looks at everything, makes sure it's all signed. Once they give that clear to fund, it's official. You're a new homeowner. So that's it. We hand you the keys, we take some pictures, we hand you gifts usually, and send you on your way. So it's really, that's it. And simple as that. So if you are watching this and you have a house to sell in order to buy, we're also going to do a how to sell a home, something similar to this on September 14th. And essentially 1 month from today, it's a Thursday at 7 p.m. And we're going to go through the details of what we do as a listing agency in order to get your house sold for the most money. But thank you for sitting through this buyer section as well, because if you're selling, you're also probably buying. And when you're selling, even if you're not buying, your buyer is going through all these steps. So it's really important that you're aware of what's going on during that process as well as a seller. Here, if you'd like to take a screenshot or write down our contact info here, the people that are hosting tonight, myself, Tasha, Dale, and Justine, all of our contact information.